Hi, good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. Um, a few things today to talk about before I go into actually most of my stories around here on the Singapore equity side. We've seen very big moves on the downside where stock or rather bond markets have been concerned. Over the last 2 days or so, bond markets in the US, in Germany or the Bund, and also in the UK, highlighted by the gilt prices, have actually seen a very sharp drawdown. A key reason for that is nervousness once more for normalization. What normalization means essentially is that as we are seeing growth indicators coming out from the different regions of the world, you may see a tightening effect on markets as expectations for rates come in. With that, bonds get sold off as rates actually go up. It's something to really watch out for because it could set things off in a negative sort of fashion. One of the possible triggers for that move could be like tomorrow's GDP announcements that will come up from most of the Eurozone areas, including we see here some of the numbers in France and also in Germany, and finally kicking off with the UK and possibly, well, maybe not the UK, but definitely where the Eurozone is concerned. So it's something I want to flag because it's going to probably dominate action, not just in the bond market, but things will filter through to the stock markets over the next 2 days or so. But anyway, for more or less our main stories today, just want to highlight a few of the Singapore stocks that Singapore equities that we are watching, including what we see over down here, SIA, Genting, ComfortDelGro, and NOL. Now these four companies will be announcing results on Thursday, some before market opens and some after market closes. SIA to begin with, they are expected to announce, I think, reasonably good numbers because not only have we seen traffic coming up or growing progressively in especially the first quarter of this year, but more importantly, they are going to probably report savings on a fuel basis purely because SIA, as I have highlighted before, they run a very aggressive fuel hedging policy. That fuel hedging policy has seen them suffering in the first quarter results when they announced higher fuel costs. Now over time, the effects of a fuel hedging policy suggests that they will probably see benefits come through. Whether it's this quarter or the next quarter, we could see things, well, as early as this quarter, seeing them announce a lower fuel charge, and with it, higher earnings or higher profitability for the company itself. Now, for NOL, it will also be featured slightly on a positive basis because over this period of time we have seen, as I've suggested before in the past also and in some of the reports, them announcing for normalization of flow of traffic, especially from their western ports in the US, as western ports workers move away from their strike industrial action early this year and returning back to work. We are going to see them coming back in, and you're going to see trade flow a bit more down there. So those incentives will also be possibly seen in their numbers tomorrow. The stock at these sort of levels is looking at finding its support around down here. We could see things bounce. I mean, if a good number does come up, we may see it bounce up to the recent high of around 120 once more. Genting, the jury is still out down there where those numbers are concerned, but we have seen a nice support for the stock coming through. This pullback down here is actually quite important because it's done and held at actually quite a high level despite this move. So technically it does look quite good, and a test for the high down here of around 105, 106 could be possible. If that doesn't happen, we'll see the stock retrace back to around the $1 level once more. Finally, just a couple of perhaps speculative calls, Thai Bev and Singpost. Now the reason why I've highlighted these two stocks is because tomorrow, or rather in Geneva tomorrow, the 13th of May, we will see MSCI rebalance some of their portfolios across Asia. The MSCI Singapore Index will also see a potential rebalancing down there. What happens in a situation like this is that they will review the stocks in their portfolio. Now up for renewal or up for review is obviously the exclusion now of Keppel Land. Keppel Land, as you remember, is actually a weighted index or weighted stock weighted in the index itself. Keppel Land is removed, may be removed purely because they have been actually taken over by Keppel Corp. Now in view of that, possible replacements could come into the index. Possible only because it's something which MSCI will ultimately be making known if they're actually going to go ahead with this. If they do go ahead with this, we may see possible candidates for replacement in Thai Beverage and Singpost. These are just speculation, may or may not happen, but it's something that we are definitely keeping our eye on. Anyway, thank you very much.